All right, welcome back to the deep dive. Today we're taking a close look at Tesla, specifically their stock performance.
Yeah, always a fascinating one.
It is. There's always something going on, isn't there? We're working off an analysis from TSLA Investors, fresh off the press today, March 14th, 2025,
No.
called Tesla Stock Analysis. Near-term momentum amid long-term valuation concerns.
Mm,
Sounds like a mouthful,
mm.
but it really just points to the fact that Tesla's stock, like so much in the market, is a bit of a puzzle.
Yeah,
And the goal is to figure out what's driving this recent activity and what does it say about Tesla's future.
exactly. And this analysis tries to do just that by taking a look at how some of those short-term events, political news or economic data, can affect a company's longer-term prospects and how investors perceive it.
Absolutely. So to kick things off, the report starts with where Tesla's stock stands right now. As of this morning, it was trading at $249.23. That's up 3.43% from yesterday's close.
Not bad, not bad.
Not bad at all. But the analysis also mentions the intraday volatility.
Right.
The stock moved between roughly $240 and $250 throughout the day. That suggests there's still some uncertainty among investors, even with the overall positive trend. What are your thoughts on that?
Well, it's never a straight line, right? A 3.43% jump is noticeable, but that intraday volatility, well, it tells me there are folks out there still trying to figure out what Tesla's really worth right now.
That makes sense.
Some are buying in, others might be taking profits. It's that push and pull that creates the swings.
Right, and the report also gives us some context, reminding us that while the stock is climbing, it's still below both its 50-day and 200-day moving averages,
Yeah,
meaning it's still on the road to recovery from earlier lows.
exactly. It's recovering, but it hasn't broken through those key trend lines yet. Some investors might be waiting to see if this momentum can hold.
Okay, so let's dig into what might be driving this recent upward movement.
Sure.
The analysis points to two main catalysts. First,
Yeah.
we had some positive inflation data released a couple of days ago.
Uh-huh.
The CPI, or Consumer Price Index, increased less than expected, which generally is good news. But can you explain why that would specifically give a boost to a stock like Tesla?
Well, when inflation cools down, it raises hopes that the Federal Reserve might ease up on interest rate hikes. They might even consider cuts down the road.
Okay,
And for growth companies like Tesla, which are often valued based on future earnings potential, lower interest rates are a good thing.
right.
They basically reduce the discount rate applied to those future earnings, making them appear more valuable today. So good news on the inflation front tends to make growth stocks more attractive to investors.
Got it. So it's all about that future potential.
Hmm.
And then we come to the second big catalyst, and this one is a bit unexpected, political support from President Trump.
Mm.
He hosted Elon Musk at the White House and publicly expressed his intention to buy a Tesla. He specifically mentioned looking at 5 different models and wanting to get a Model S1. This comes after a pretty, well, let's say, dynamic history between the two. How much weight should we give something like this? I mean, it's not every day the president endorses a specific car company.
No, it's not. And you're right. It's been a bit of a roller coaster between those two. But I think this is a fascinating example of how politics and business are increasingly intertwined. You
Right.
know, a presidential nod, it's more than just a celebrity endorsement. It could actually signal a shift in the regulatory environment, especially for a company like Tesla that's been pushing the boundaries in areas like autonomous driving. Investors might see this as reducing risk, making Tesla's future look a bit brighter.
Makes sense.
Yeah.
And that positive sentiment can translate into upward movement in the stock price.
Absolutely. And it's a good reminder that sometimes the most impactful market movers aren't the usual financial metrics. It can be something as seemingly simple as a political endorsement.
Absolutely. Okay, so now let's shift gears a bit and look at the financials. The analysis compares Tesla's metrics to more established automakers like Ford and General Motors. And it's the valuation that really jumps out. Tesla's price-to-earnings ratio and price-to-sales ratio are way higher than Ford and GM. What's the story there?
Well, it really highlights how the market views Tesla differently. It's not about current profits or sales figures.
Right.
Investors are willing to pay a premium for Tesla because they're betting on its future growth and its potential to disrupt the automotive and energy industries. It's the classic growth stock scenario.
Gotcha. So it's all about that potential. But the analysis also points out that Tesla has stronger liquidity than Ford and GM, better quick and current ratios. Why is that important?
Liquidity is crucial, especially for a company like Tesla that's still in a heavy investment phase. It means they have more readily available cash to cover their short-term obligations, to keep the lights on, so to speak, while they're pouring resources into research and development, expanding their production, and navigating a rapidly changing market.
So it's like a safety net.
It's like a safety net, exactly. It gives them more breathing room, more flexibility to adapt to unexpected challenges, and to seize new opportunities.
Makes sense. Now, the report does note that Tesla's earnings per share are relatively modest compared to their growth ambitions.
Yeah, it's not about today's profits, it's about tomorrow's potential. And that makes the stock highly sensitive to anything that might impact that future growth, good or bad.
Okay, so let's talk about what the analysts are saying. The analysis highlights some diverging opinions on where Tesla's stock might be headed.
Right.
Morningstar's fair value estimate is pretty close to the current trading price, but long forecast predicts a pretty significant drop followed by a recovery later on. What should we make of these contrasting views?
It really just shows the level of uncertainty around Tesla's future. Morningstar's saying, hey, based on our long-term analysis, the price is about right. But long forecast is saying, look, there's a lot of potential for volatility, for big swings up or down. And honestly, the reality is probably somewhere in between. What it really emphasizes is that anyone thinking about investing in Tesla needs to do their homework and understand their own risk tolerance.
Absolutely, and the analysis lays out the bull and bear cases for Tesla. The bull case is all about their potential to disrupt automotive and energy.
Right.
The bear case is more cautious, pointing to increasing competition that could squeeze profit margins.
Yeah.
Where do you stand on those arguments?
Well, I think we're seeing evidence of both right now. The recent stock movement suggests the bulls are gaining some ground, especially after those positive catalysts we talked about. But the competition is real, and it's only getting tougher. More and more electric vehicles are hitting the market from traditional automakers and new players, especially from China.
Yeah, it's a crowded field.
Yeah, sure.
And speaking of the industry context, the report highlights that traditional manufacturers have some advantages. They've established production, supply chains, dealer networks, things Tesla's still building up. So how does Tesla's vertically integrated approach fit into this competitive landscape?
Tesla's vertical integration is a bold strategy. They're controlling a lot more of their supply chain, from battery production to software, which gives them more control, potentially over quality, costs, and how fast they can innovate.
Makes sense.
But it's a huge upfront investment, and it adds complexity. So whether it's a winning strategy in the long run, well, that remains to be seen. It all depends on how effectively they can execute.
Okay, so looking ahead, the report identifies some potential growth drivers for Tesla, like new vehicle models, advancements in autonomous driving. But it also flags potential risks, things like pricing pressure, supply chain disruptions. Of those growth drivers, which do you think holds the most promise in the near term?
I think the most immediate growth driver is likely to be new, more affordable vehicle models. Reaching a wider customer base, folks who aren't looking for the top-of-the-line models, that's key for increasing sales volume and competing with the flood of new EVs hitting the market.
Right, make it accessible. And on the flip side, what's the biggest risk Tesla faces right now?
Well, I think the biggest and most immediate threat is that increasing competition and the potential for a price war. As more and more EVs become available, Tesla might have to lower prices to stay competitive, and that could really eat into their profit margins and potentially impact that high valuation.
Okay, so to wrap up, the analysis talks about the investment implications. The decision to invest in Tesla, it's personal.
Absolutely.
Depends on individual goals, risk tolerance, all of that. For our listeners today, what's the key takeaway about Tesla's valuation they should consider?
I think the key takeaway is that Tesla's current stock price is all about expectations. It's not about what they're earning today. It's about the belief that they're going to be a dominant force in the future.
Right.
So investing in Tesla at this point is a bet on that future, a bet on their vision. It's not for the faint of heart.
So to summarize, we've seen how Tesla's stock has been moving upwards, helped by good news on the inflation front and, surprisingly, a seemingly more positive relationship with President Trump. However, the analysis reminds us that Tesla is still a company with a very high valuation compared to its earnings and faces increasing competition in the electric vehicle space. The differing opinions from analysts show that there's still a lot of uncertainty about Tesla's long-term trajectory. So for you, the listener, this deep dive has really highlighted how different factors, from economic indicators to political developments to competitive forces, all come together to shape the performance of a stock. especially for a company at the forefront of innovation like Tesla. We saw how a seemingly unrelated event, President Trump's interest in buying a Tesla, can create a ripple effect in the market. It makes you wonder, in a world where technology is changing rapidly and political landscapes are constantly shifting, how much of a role will these unexpected alliances or endorsements play in shaping the future of companies? Is this a new factor we need to start paying more attention to when we're trying to understand market trends and potential disruptions? Food for thought as we continue to explore the ever-evolving world of business and technology.